Are you ready to escape the hustle and bustle of everyday life with a second home? In this video, we'll share some insider secrets on how you can obtain a mortgage for your secondary home. From the mountains to the beaches, we got you covered with all the information you'll need to make your second home a reality. Get ready, pack your bags, and tune in to discover how to finance your perfect vacation getaway. Let's get started. I'm Shane Gillin. Welcome back to the channel where I help you live your best life in Newport Beach. And joining me today to answer some of your questions is Mina with Guaranteed Rate. Mina is one of the top 1% mortgage originators in America, and she's on the list of top producers in the country in the Scotsman's Guide for 2022. So Mina, what are the basics that people need to know about some of these types of loans?
Yes, so vacation property loans in general. So I guess first thing I would mention is the fact that the occupancy does matter when it comes to what the qualifying guidelines are going to be. So if you're buying a home as a vacation property versus a primary, the down payment requirement is going to be different. Or investment property versus vacation property, the down payment requirement and different, details regarding the guidelines are going to be slightly different. So first off, when it comes to vacation properties, compared to like a primary owner-occupied home where you have much lower down payment options available with FHA 3.5% down, conventional 3 to 5% down. If it's a vacation property loan, then first off, FHA financing is out the window since that only allows for owner-occupied properties. But with conventional loans, you do have the option to put down as little as 10% down, but it is a little bit higher from the primary owner-occupied, but it is still lower than buying an investment property, which would require, typically for most banks and lenders, 20%, but some will have 15% down payments, but the rates get a little bit ugly. And on the topic of rates, depending on the occupancy, the rates are different. So primary owner-occupied is going to come with the best terms, best rates, but vacation property loans are going to be slightly higher than primary owner-occupied, and the highest would be with investment property loans. And just to kind of even mention background, by the way, on why that's the case, from the bank and lender's perspective, especially when lending upon a home that somebody's buying as a vacation or investment home, when you ask the question of if that family goes through a financial hardship, which home mortgage will they prioritize paying back? It's going to be their primary. And that's why it's considered the lowest risk, aka the rates are the most favorable with that type of occupancy.
Yes, it's more of a risk factor when it comes to the banks. What about types of properties? Obviously, when they're secondary homes, even investment homes, we have condos, we have single family, we have mixed use. What about even mixed use is actually a good question too. Like we have a live workplace down at the beach, maybe someone wanted that, or even multi-unit.
Yeah, so when it comes to secondary residence, overall, it's very similar restrictions in terms of, or not even restrictions, but guidelines, same as even an owner-occupied conventional loan. It really depends on the loan program you're going with. Now, as long as the loan amount is under $1,089,300, then it's still eligible for conventional financing.
Even on a secondary home or vacation rental?
Exactly.
Yeah.
Yeah, so that's all the same. But of course, again, you need a 10% down payment, right? But overall, when it comes to mixed use properties, and this applies to even if you're buying a home as a primary owner-occupied residence, Fannie and Freddie don't really like mixed use type properties. They have a lot more restrictions and guidelines around them. So typically in those situations, we may have to go a more creative route. So not like an agency program, but more a non-QM, or non-QM basically means just not under the agency guidelines, and they have a little bit more flexible requirements when trying to qualify with maybe a property type that Fannie and Freddie are not willing to lend upon.
Okay. And qualifications for these types of loans, secondary or vacation homes?
Yeah, so the qualifications, similar again to primary owner-occupied, but you have to consider that vacation property loans are a little bit tougher to qualify for than, let's say, an investment property loan. With assuming apples to apples, let's say 20% down, you're considering doing a vacation property loan or an investment. Now, with an investment property loan, you're able to take the market rents, and technically 75% of the market rents we can use to offset that housing payment from having to consider the full payment into your debt to income ratio. Because if you currently already own a home or have a rent payment, you have to qualify with the debt to income ratio calculation, which I can get into if you would like, but Basically, it makes it tougher to qualify for a vacation property because you have to make sure that you qualify for your current housing payment that you live in and that mortgage payment, and keep that under a 50% debt to income ratio.
Okay.
Investment properties, you can actually account for part of the market rents to offset that housing payment to make it a little bit easier to qualify.
Okay. So depending on which market you're looking in, are you looking for a vacation home or secondary home? There's definitely different options and different ways to go about purchasing in the mortgage. So make sure you know what you want, where you want, and how to get there.
Definitely. And then also I'll kind of mention too that, with vacation property loans, yes, the main kind of, benefit compared to an investment loan is that you can go down to a 10% down payment.
Okay.
But if the down payment's not the primary concern, then when it comes to investment property purchases, you could still treat it as, let's say, an Airbnb type property too.
Yep. A lot of those in Newport, right?
Exactly. But you can't necessarily, for example, if you're trying, let's say I live in Orange County, I live in Tustin, but let's say hypothetically I live in a very beautiful house in Newport Beach.
Sure.
And I'm trying to buy a 1-bed, 1-bath property as a vacation property just because I want to do a 10% down and it's located in, Anaheim. The underwriters will not allow me to use a vacation property loan if the location doesn't make sense. I can't really argue if I live by the beach already that, that's going to be my vacation property in Anaheim, a 1-bed, 1-bath condo.
Okay, so you can't get a vacation home loan mortgage on a house that's very close by where your already primary residence is. That's good to know.
Exactly. And I will say there are some caveats to that. Like, for example, if in the case where I want to buy a vacation property in Newport Beach and I'm currently in Tustin, it's pretty close by, but Newport Beach or by the beach, that's considered kind of a vacation area.
Yeah.
So that you can argue is legitimately going to be your vacation property.
Okay, so getting a hold of you, discussing what may and what may not qualify is a great way to start.
Absolutely. Just asking the questions, because there are a lot of little kind of, loopholes around different occupancy types, but you won't know unless we evaluate per property and where it's located.
Yeah.
But it's interesting. Vacation property loans got huge and popular, especially during the pandemic. And due to short-term rentals, Airbnb, of course, the cash flow on them is pretty crazy.
Yeah. Is there a gray line between short-term rental property investment and your vacation home? Because a lot of people buy a home as a secondary home, vacation home, but they also, like in Big Bear, for example, a lot of people have bought homes up in the mountains, which is only about an hour and a half away from us. And it's a mountain house that they use, but they also do short-term rentals on it as well.
Yeah, so as long as you are actually still using it for some points of the year, you could still use a vacation property loan.
Okay.
And that part, it's mainly what the banks and what all the, when you determine what occupancy type you're going with a loan program, they just care about what your intent is. And so if your intention is to use it every now and then as a vacation property, even if you end up putting it on Airbnb later on, no one's going to, stifle you for it.
All right. All very useful information. You guys get in the know. Contact Mina, contact myself. We can put you in contact with her. Thank you very much.
Yeah, thank you so much for having me. And I do put out educational content online sometimes. So if you look up @Mina Mortgage on Instagram, then you can find my profile. Thank you so much.
Now, you want to continue learning more on how to purchase a secondary home? Click on that video on your screen. We'll dig deeper into the topic and provide some useful tools to help you live your best life in Newport Beach. So click on it now. We'll see you there.